What if the global financial system isn't entering a temporary slowdown, but a complete, systematic restructuring of wealth? Right now, behind the closed doors of international central banks and elite corporate institutions, the rules of money are being rewritten. The mainstream media keeps your attention fixed on short-term political drama and daily stock market fluctuations. But if you know how to decode the mechanical drivers of the macroeconomic machine, you realize that a historic paradigm shift is closing in. Billionaire investor Ray Dalio, the founder of Bridgewater Associates, has proven that before every major collapse of a reserve currency empire, specific structural markers flash red. You do not need to guess the future, you just need to look at the data. In this analysis, we are conducting a brutal diagnostic check on the global economy. We are breaking down the 5 undeniable macroeconomic signs that prove Ray Dalio's wealth reset has already begun, and exactly how you must adjust your portfolio today to avoid being part of the middle class that gets financially hollowed out. Let's count down the machine. Sign number 5, the exponential debt spiral. The first component of the reset is the absolute loss of control over sovereign debt. Ray Dalio's historical data shows that in the late stages of a long-term debt cycle, an empire reaches a point where it must borrow money just to pay the interest on its past debt. Look at the United States today. The national debt is expanding by a staggering $1 trillion roughly every 100 days. The annual interest payment alone has crossed the $1 trillion mark, swallowing more revenue than the entire national defense budget. This is the definition of a mathematical black hole. The government cannot raise taxes high enough to cover this gap without triggering an immediate economic depression. Therefore, they only have one survival mechanism: monetization. They must force the central bank to print the currency required to buy their own unpayable debt notes. When a state prints money to fund its deficits, it is executing a silent forced tax on your savings. Your numbers stay the same, but your purchasing power is systematically liquidated. ADAs. Sign number 4, the silent de-dollarization by central banks. While retail consumers are told that holding cash in a traditional bank account is the safest financial strategy, the ultimate institutional insiders are doing the exact opposite. Central banks around the world, particularly across Asia and the Middle East, are executing a massive, coordinated exit from the US dollar architecture. The share of global foreign exchange reserves held in dollars has dropped to historic lows. Following the weaponization of the Western banking system and the shifting alliances of the BRICS bloc, nations are realizing that holding paper currency carries immense counterparty risk. They are no longer recycling their trade surpluses into U.S. treasuries. Instead, they are converting their paper reserves into the only asset that cannot be printed by a government decree, devalued by an institution, or frozen by a political adversary: physical gold. Central bank gold accumulation has shattered historical records. The insiders are quietly building a lifeboat while telling the public that the paper ship is unsinkable. Sign number 3, the paralyzed housing market. The middle class measures its wealth through home ownership. But under the current paradigm, the real estate market has entered a state of structural paralysis. When central banks printed trillions of dollars during the cheap money era, they created an artificial asset bubble that pushed property prices completely out of reach for the average worker. To fight the resulting inflation, they were forced to aggressively hike interest rates. This rapid rise in rates created a catastrophic lock-in effect. Current homeowners refuse to sell because they do not want to abandon their historic 2% mortgage rates for a new 7% loan. Inventory has dried up, transactions have frozen, and first-time buyers are permanently locked out. The classic engine of middle-class wealth accumulation has been broken by capital distortion, transforming an entire generation into permanent renters dependent on institutional corporate landlords. Sign number 2, the widening ideological and wealth gap. Ray Dalio's historical metrics prove that economic collapses are never just financial events, they are social events. When an empire prints money to bail out the financial system, that new liquidity does not distribute equally. It flows directly into asset markets, making the top 1% who own the assets incredibly wealthy, while the bottom 80% face a skyrocketing cost of living without a corresponding rise in real wages. This structural inequality creates massive internal friction. We are seeing the highest levels of political polarization, social unrest, and populist movements in the United States since the late 1930s. When the wealth gap widens during an economic crisis, populations lose faith in the system itself, leading to erratic political shifts, increased corporate taxation, and domestic instability that threatens the baseline security of traditional investments. Sign number 1. The emergence of the multipolar monetary order. The ultimate sign that the reset is here is the fragmentation of global trade settlement. For 50 years, the US dollar's hegemony was guaranteed by the petrodollar agreement, the rule that global energy could only be priced and purchased in greenbacks. This forced every nation on Earth to maintain massive dollar reserves just to power their domestic economies. Today, that floor has officially been pulled away. Major energy producers, led by Saudi Arabia and the United Arab Emirates, are actively settling multi-billion-dollar oil and gas contracts in Chinese yuan, Indian rupees, and local digital currencies. The global monetary system is fracturing into a multipolar order. When the structural, mandatory demand for the dollar disappears internationally, trillions of offshore paper notes will inevitably flood back into the American domestic economy, triggering an unprecedented, long-term inflationary shock. The blueprint for survival. The economic machine is executing a cycle that has repeated for 500 years across multiple empires. The wealth reset is not a future possibility. It is a current mathematical reality. The traditional milestones of personal finance, holding cash, relying on local savings accounts, or investing blindly in concentrated equity indexes are the most dangerous playbooks for this decade. To step outside of the trap, you must follow Ray Dalio's core institutional directive: achieve true risk parity. You must transition your capital from paper liabilities into productive, globally diversified equities that possess real pricing power. You must anchor a structural piece of your net worth in hard, unprintable assets like gold and raw materials that protect your purchasing power from currency debasement. And most importantly, you must maximize your personal productivity and specialized skills, because a government can inflate away a currency, but it can never devalue your capability to solve complex problems for the global marketplace. The system is resetting. Position your capital, eliminate your biases, and master the cycle. We have a completed